not in an acute crisis, we're still in a chronic phase, and many issues remain to be resolved.
And I think there are three things that I would point to as immediate challenges for restarting growth in Europe. They're financial fragmentation that inhibits the effectiveness of monetary policy and prevents the flow of financing to the periphery. There's the still large debt overhang, public and private, in a number of countries in Europe that's requiring simultaneous deleveraging, that's slowing domestic demand growth. And finally, there's the well-known structural impediments in labor markets and in product markets that are constraining potential growth, not just in the periphery, but also in the core.
Moved from the operational crisis management into a stage where we are searching for systemic solutions. And we have hard facts, evidence to be more optimistic. First, the cumulated budget deficit of the Eurozone went down from 6.4% in 2009 to 3.7% last year, and it's going to be below 3% this year. The government bonds in Portugal or in Spain, of course, have their interest rate dropped by 50%. And we will be seeing, the Eurozone emerged from the crisis, from the recession, for the first time after 18 months in the second quarter of this year. So we will be seeing new elements such as European Commission scrutinizing the national budget proposals of the EU member states. So this is unprecedented and unheard of. So we are definitely in the better place, but of course there is no time for complacency.
If this crisis was 100 steps, I would argue that we have taken approximately 70 of those steps. I think the times have been very turbulent. There will be a little bit more turbulence, but the worst is over.
I think it is hard to translate what we are talking about into the direct impact on people's lives. But we have tried to get some sense of this by looking at the impact of the crisis on the region where EBRD works in Central Eastern Europe. That was the part of the world most affected by the crisis. And it's very clear that it's cut very deep into people's lives. You could see the impact on, what kind of food they ate and, how large their food budgets were. We could see the impact on how likely they were to go to a doctor. So these things are really cutting very, very deep into people's lives. And explaining, how what we are doing is going to help that is essential. And what you could see, for example, is that people who had access to a functioning financial system could go to the banks in the crisis. The more you had of that, the less was the impact of the crisis. So what we are trying to create we talk about these big terms of financial architecture and so on, it's really about protecting the depositors that you were talking about, people who put their money in the system. They should know that when they put it in the system, they should get something back. That's what deposit insurance is about.
The reason that banking union is important is because if you want to have a free flow of capital across national boundaries, you need to have a mechanism that allows you to make sure that banks continue to be supervised adequately and to make sure that when there are problems in a banking system that involve a bank that's exposed in many different countries, that you have an effective way of resolving those mechanisms and you don't have each individual country essentially circle the wagons. I think that's jargon, but it's not banking jargon. Essentially decide on its own that it's going to settle the problems in a way that's most effective for its own national interests, but may not serve the interests of the euro area more broadly.
But in general, I'm optimistic because we have the situation clearly in our hands. We have identified the challenges. What we need is to show leadership and responsibility and also the courage. This is how I see the situation.